have quite few strategies which you kind of help them with several strategies, and one of them is debt reduction strategy.
Yes.
Can you tell about it?
Yeah, absolutely. So it's quite simple. Debt reduction really means that we're going to take all available income for our clients. So that could be from investment properties that they have, so the rental income, also the tax deductions that come from those properties that they're buying. So typically, people are used to that coming to them as an annual tax deduction at the end of the financial year. What we do is actually submit an income tax withholding variation to the tax office, which then means the person is entitled to receive that tax deduction week by week in their pay packet. Okay, not a lot of people know about this, but there's obviously a benefit to it being in your pocket every week rather than the tax office. The other aspect would be the job incomes of the people. All of those incomes we're going to send straight into an offset account against their home that they live in. The reason we're doing that is quite simple. It's mathematical. We want to reduce the daily balance because banks calculate your interest daily, but they only charge it to you typically monthly. So by doing that, people are often saving many thousands just per month. And then obviously, if you can imagine, you extrapolate that over years. I've seen cases of people taking a 25-year mortgage and turning it into 10 years. Yeah, and so people are often quite shocked when they see it actually amortized on a graph for them. They're saving many years and literally 6 figures of interest that they would have paid without the strategy.
Basically, if you do that, it brings you to early retirement. And it's quite a big theme in your club as well. So you're trying to bring people to the early retirement stage,
Yes.
where you can retire not when they cannot move, but when they're pretty active, right? So can you tell something about that?
For sure, it's quite simple. So again, the debt reduction program and the early retirement strategy are designed to be used concurrently together. So with the debt reduction program, it's obviously so that we have more available money that would have been lost to interest in the home, and then we're going to use that for further investing over our investing life. The idea being we're building actually 2 property portfolios, one in the name of a self-managed super fund, the other in your personal name. When you hit retirement, you're going to want to sell which? The super properties, because at retirement there's 0 capital gains tax and 0 income tax. So that money from the sale of those properties will come to you personally, tax-free, no money paid to the tax office, which is great. And then we use that money to go and pay off any remaining debts or mortgages in the personal name. And then we're living off the passive rental income of the remaining properties. And that's how we fund the cash flow for our retirement.